everybody. Welcome to the Work Hard, Play Hard podcast. Today, we're going to talk about title.
Exciting.
What is title? Yeah, the title, we're going to talk about title. So I got with me Mark Schroeppel. He is an owner of Utah First Title. Utah First Title is a great title company. I've used them for years. Mark's a veteran in the industry, knows a lot about this stuff, and so today we're going to talk to him and kind of get some information about what is title, help us understand this. It's obviously a line item fee on everybody's closing disclosure, and why are we paying this? What is this for? So before we get into that though, Mark, why don't you just kind of introduce yourself, tell us about yourself, how you got into title, that kind of stuff.
So in 1992, I was in real estate and became a real estate broker, and worked for a local real estate company, and did the broker thing too, where I was helping agents, work on their problems. And I went into the title company one day, it was 1997, and they said, "You should work here." And I said, "I think I'd really enjoy it." And so I went to work for a big national title company in 1997, and I did, enjoy it. I felt like after all these years in my career, I felt like I'd finally
Found home.
Yeah, it was something very comfortable for me. And so worked at a big national company for 6 years, and then Chuck Walker and I in 2003 opened our own title company, Utah First Title, and we've been in the marketplace. We're a top 5 local title insurance company.
That's awesome. Like I said, I've worked with them for years. I can vouch for their good title company. Great to work with. High quality guys. So so tell us about title. Why do people have title insurance? What is title?
That's a very good question. So first of all, people need to understand that there's a couple different aspects to title, and first of all, it's an insurance product. And we are an insurance agent that sells insurance against the ownership of property. And the other thing that makes title different from other insurance products insure future events. If your car gets in a wreck, the insurance will pay for your car. Title is just the opposite of that. It insures past events, so that anything that would come up and be found out that would go against the ownership of the property, we first do research to find out if there's anything that might come against the property as far as its ownership and your ability to transfer title. And title is, when we refer to title, we refer to like the ownership. And so it's something that would be a cloud that title and go against it. So your ability to purvey that title, to give a clear ownership interest to somebody else, anything that could affect that, we do the research, we try to remove that, and then we insure against that, and to make sure that people can convey title without any claims.
So let's dive into that a little bit more. So how do you do research how do you research title then? What do you guys do for that?
So we have a title department at our company, and they do research, and they typically research the chain of title back to the patent deed. And patent deeds came about when Utah became a state, and the government says, if you go out and homestead that land, we will give you a deed for it, and because you're going to homestead it. And so the government gave the original patent deeds for these homeowners, and we researched the chain of that through this man sold it to, or gave it to his son, and it stayed in the family, and then it changed hands in 1884, and then on and on and on to present day. And so we research that and try to find anything that could have gone against that in that time period.
Okay. So then so somebody has so let's talk about title then. So one of the fees that people pay is title insurance, right?
Sure.
So again, what are they? Why are they paying this fee? Where does this go? What's going on there?
So there's a big part of it. There's two parts to the process, and one's the title, the research that we just talked about.
Okay.
The other piece of it is the escrow piece, and the escrow piece involves us handling the monies, exchanging, documents, make sure that the contracts are followed, and make sure that all the conditions of those contracts were followed into closing. And then we're also an impartial intermediary, what's called a fiduciary. And so as a fiduciary, we take the products, because if you were selling your car to a guy and he had the deed in his hand and you had the money in your hand, and you go, okay, give me the deed. Okay,
No,
wait,
you go
give
first.
me
You go
give me
first.
the money, and
Yeah.
I'll give you the deed.
Okay.
So you give us the deed, you give us the cash, and we exchange that and take care of it. We pay off the mortgages that are associated with the property, et cetera. So that's part of the escrow process, and the other part's the part we talked about earlier. It's the title process of the research.
So if a mortgage wasn't paid off, or a realtor wasn't paid or something like that, that comes back to you guys then.
Yes, we ensure that those things get taken care of. And what happens is that, we know that anyone can sue us for any number of reasons.
Sure.
And what happens is the title company comes in and they are kind of the intermediary there. We say, okay, we'll take care of this, and then we'll go sort it out on who should have been taken care of and what should have been done in the first place.
Okay. So, so why would somebody? So let's fast forward and say somebody bought a home for a year. They lived in there a year, and all of a sudden, somebody comes to them and says, "Hey, I did work on your home, 2 years ago. You guys owe me money." And they obviously only owned it for the last year. What happens in that situation?
Well, it goes back to lien conditions, but basically, the title company typically would retain an attorney and have them fight that battle for you.
Okay.
Yeah.
So they're there to kind of help make sure that, hey, that guy didn't file a lien, I guess, beforehand.
He didn't
stuff
file,
like that,
even if it was justly owed, if he didn't follow the correct lien procedures for the state of Utah, he could have an invalid claim.
Gotcha. So
Yes.
even though he did the work, he should have gotten paid. He didn't do the right work.
Yes.
And so that
Yeah.
new homeowner shouldn't have to pay that.
Right.
Is what you're saying.
Right.
Okay. Is that the same with like new construction? What about new construction? How does that work? With
Yeah, that would be a more typical new construction issue where that came up. It's possible, but if somebody just said they did the work and didn't get paid, that's not necessarily a claim in and of itself, because there has to be it has to be something of record. He had to have done his due diligence and filed a lien against the property, and then maybe if his lien was overlooked. But there's other title issues that can come up. So let's say you bought a home in this subdivision, because this one just happened not too long ago in Highland.
Okay.
And so this farmer sells his land to a developer, and the developer builds 27 houses in this subdivision. And a year or so down the road, this family member comes to town and says, "Hey, my family that sold that didn't have the right to sell it because I was on that deed too. I should have been included in this, and now I'm putting liens against all 27 homes because all 27 of you owe me money."
Sure.
Because I didn't get any money out of this sale. And the titles stepped in and hired an attorney, and the thing is they made this person right. The liens were removed, and then they go back off after and fix what should have happened in the first place.
So if title didn't exist, those homeowners are fighting that individually then.
Yes, there's 27 of them fighting. One that has a valid claim. This person,
Like he should have gotten paid something.
Yeah,
or,
and so it might have been his brother who defrauded him, but still, it's your problem now because you have the lien against your home.
Gotcha, because you
Yep.
own the house. Okay.
Yep.
So again, title. So that's another good example of why title would be important to have, right?
Yes.
Have that
Yes.
insurance in place for nothing they did wrong. Those homeowners did nothing
Exactly.
wrong, right? They bought a home that was for sale legitimately.
And typically,
anything like
these are things that happened in the past, and it happened before they got into it. But yes,
Sure.
they still have to deal with it because they're the owner now, and that's where the lien gets filed on the property owner who owns it now.
Okay. That makes sense. So I guess putting you on the spot, is there any other? That's a good story. That's a good example, I guess. Do you have any other stories of like things that have happened, with title, kind of the horror stories or I don't know, any cool stories from that you can think of offhand?
Maybe you think they're cool stories. From a title perspective, they're not such cool
Okay,
stories.
So that's what I said horror stories too, right? So those any stories
No,
like
but
that?
what people really need to know is that's what the title insurance company is there for, is to take the worries out. And so they don't need to be experts on chain of title and
Sure.
the ownership condition of the property. But that's what title is there for, is to make sure that their ownership rights are represented and protected.
Okay. So fast forward for a homeowner, so what happens when somebody pays off their mortgage? When people pay off their car, if they had a loan on it and stuff like that, a lot of times the bank will ship them, mail them their title, right? Hey, I got my title, it's free and clear, kind of thing. Does that happen with a mortgage or
No.
what? No? There's
No,
no.
you pay off your mortgage and you just have the satisfaction of paying off your mortgage. You don't get a certificate. It's not as fun.
Yeah.
People that have their mortgage, they can look on the county, and the county will show that there is no liens against the property,
Okay.
and that's the only. It's really, you don't have a proof. It's just that you have the removal of the lien. They reconvey the title to you.
Gotcha.
So it would be Ryan who owns the title in first position, but a lien holder would be, who's like your big,
Security home mortgage. I
Yeah,
guess,
security home
Yeah.
mortgage
Yeah, we'll just-
is the lien holder on that. And so when security home mortgage, they get the mortgage paid off, they would reconvey title so their liens are removed.
Gotcha.
And so it's not as exciting as having the deed to your title in your file box underneath your desk.
Gotcha.
That's more exciting.
Because with homes, you already have the title, right? I mean, the title's already yours.
Right.
You own the home. It's just, if you're gonna sell it, you gotta
They
pay
have
off
an
some
interest
people.
in it,
They have an
yes.
interest in selling, which is why you can't sell a home without first making sure that
Yeah.
everything's cleared.
That's right. And that's what we do, is that, like, when you sell your home, we go to Security Home Mortgage and say, what does Ryan owe on this mortgage?
Yeah.
And then we handle that payoff, and we take the funds from the buyer and pay off your mortgage. So everything's removed and the buyer gets the property free and clear, except for any new mortgages they're put on, which would be a new lien
Gotcha.
on the home. And then we ensure that their new lien goes on in the correct order too.
Gotcha. So one of your main jobs then is essentially that intermediary person, right?
Yes.
You're the one handling, really making sure that everything's done correctly, ensuring that it's done correctly, essentially, so the borrower doesn't have to worry about that. Making sure that everybody's paid off and again, that everything's okay, so that buyer can have the security and knowledge that, hey, I'm good, I'm just gonna pay my mortgage, I don't
Yes.
have any extra stuff I have to pay.
Yes, and I have someone looking out for me that's got my back if something goes south.
Sure, if some brother comes and
But
says,
you're bringing
hey,
this all up now, Ryan, and now I'm not gonna sleep at night because you're reminding me of all the things that could go wrong with the chain of
hey,
title.
I'm certainly glad I don't own a title company. That's right, I don't have to worry about these kind of things. So, anything else as we conclude about title that anybody would want to know? I mean, essentially.
Yeah, there's a couple other things. I think that people need to understand when you buy in the buy and sell process that the buyer gets a policy of title insurance, and the insurance they're purchasing pays off the lender.
Okay.
And so the lender's protected, so the buyer doesn't get any coverage from that at all. If there was some failure and someone went after the buyer, they wouldn't have that coverage. It's the lenders that protected. The buyer gets covered because the seller, according to the REPC and the state contract,
Okay.
the seller provides a policy of title insurance which indemnifies the buyer, and that's where they get their coverage, is from the seller, who's saying, I'm giving you this, not only the home, but to ensure the fact that you have clear title to it, I'm paying for a policy of title insurance in your behalf, which will protect you, because the buyer's buying a policy of title insurance to protect the lender.
Gotcha. And so why does I mean, I'm thinking protecting the lender, that's really, kind of.
Because they have an
too, so
interest
what-
position on it, because,
Yeah.
the lender, just gave you $500,000 towards the purchase of this home.
Sure.
And so they have an interest on it, so they wanna protect their interests for their shareholders, and so the title insurance policy would protect them, and the lenders think it's important enough to have a title insurance policy for them, for their protection, so the buyer should have one for their own protection too.
Okay.
Just like if you have insurance and you're insuring your car for your daughter, and she gets in an accident, that doesn't pay grandma and grandpa anything. So there's one beneficiary. The beneficiary in this case is the seller or the lender, and that's who gets paid off, and that's why you're buying a policy, of that to protect those people.
Okay, that makes sense. I know at your office downstairs, you have a bunch of deeds on the wall, kind of for Monopoly and stuff like that.
Yeah, we did some clever decorating, and so Monopoly gives you a deed. So we have those cards blown up and put on the wall.
So so that's kind of along the lines of what you guys do.
Yes.
I guess I could have just started there. Huh?
Yes,
We should just start with Monopoly.
Monopoly, and you know. And you want to get
Yeah.
Boardwalk and Park Place, so
Yeah.
every time you pass go, someone's going to
Yeah.
pay you a lot of money.
Yeah, they're the good ones to
Yeah.
own.
You want to be the banker, though.
That's
Yeah,
there's no money in that.
Oh,
There's no money
okay.
in that.
Okay.
Okay, well, perfect. Well, I appreciate you coming on, Mark, and talking to us about title and all the things you guys do as far as that goes.
I know it's not very exciting, but the good thing is a peace of mind and the protection.
Well, I guess I would say it's like most insurance. Ideally, you never have to use it.
Absolutely.
Right? I mean, we pay for homeowners insurance, life insurance, car insurance. At the end of the day, the goal is, I'm never in a car accident, I never die, and I never have my house burned down.
Right.
So,
Absolutely.
But those things will happen, and occasionally, and so it's good to be prepared, right?
Yes,
So,
because you think about it. I don't know, what is the average home price in Utah County? Do you think?
right now,
Yeah.
much higher, probably $450 right
Yeah,
now.
I'd say it's $450,000, $500,000. So you have that kind of asset, and you pay $2,000 title insurance, and it insures you keeping that asset.
Yeah.
I think that's it's money well spent.
I would agree. I would agree. Okay. Well, thanks, Mark. Appreciate you coming on.
Absolutely. Thanks for having me.